it's a decent sized company. The flipping company is about 21, 22 employees. So we have overhead, we have expenses, we have marketing. So do we need cash now? Does, cash cycle? All right, let's wholesale these next few, or this one would make sense as a wholesale. Let's get some cash coming in the door. We always like to have big chunks in flips. So, cash now wholesale, bigger chunks cash later, flips, and strategically have those hit where we're, having 3 to 5 flips hit the market every single month. So we know we have, hopefully bigger chunks coming in. And then, does it make sense as a rental as far as cash flow goes? That's the other side of it, because 60% of what we buy, 70% maybe doesn't make sense as a rental. A $450,000 house in St. Louis is not going to cash flow, right? We need
Right.
that 150 to $300 house. That's what will cash flow in St. So it's one of those things where, does it cash flow? And if it does, then if it cash flows and our other buckets are full, we'll probably keep it as a rental. But if they need the money, the company needs the money, or it won't cash flow, which happens a lot, then we wholesale it or flip it or do whatever.
Okay. What have you guys adjusted, right? Since the market adjusted, because St. Louis is similar to Chicago, right? At one point you were picking those things up for 30, 40, $50,000, right? And then it jumped up to, wow, okay, same thing we were paying $50,000 for, now it's 150 grand. What did you guys strategically change in order to change with the market?
Yeah, so the biggest thing we're doing is we're definitely flipping more than we did. There's a very limited supply of nice move-in ready houses on the retail, retail side as well as the rental side. So there's just a limited amount of supply. So we are flipping a little bit more than we had in the past. We're not keeping as many rentals as we had in the past. But as far as like what we're doing, we're just kind of being a little more realistic with cash flow. Prices low, interest rates low, fast appreciation, great cash flow. That is a very, very unique time in my investing career and probably going forward. I think too many people are waiting for the 3-4% interest rates again. And honestly, on commercial loans, I don't know if we'll ever see, we got some 3.75, 3.95 commercial loans, and I don't know that we'll ever see that again. Honestly, Fed's funds rates rarely ever zero, probably will never be again. So I think just having the new expectation that this is the way of the world going forward, in my opinion. We're historically average on interest rates. Inflation is a little bit higher than everybody would like. I understand that. But as far as interest rates go, this is probably where we're going to be. I see us in this 5.5 to 6 to 8% range for a long time, unless something crazy happens, which no one can predict, nor should they run a business predicting something crazy to happen. So I just think being realistic and being able to walk into a bird deal and not use any of your own money, pull out 10 grand, cash for $400 a month, those days are over. And I don't think they're coming back. So we have to get strategic, set the expectation, get a deal, not have to leave any money in it, or just pull a little bit out or break even on it and make $100 a month, $150 a month. That's just what we want to do if we want to buy rentals. And I'm okay with it because of the tax savings, and real estate doubles in value every 15 years. And I always say I'm going to make 200 grand in 10 years every rental house I buy, with growth and debt pay down and cash flow. Just understanding that it's not going to be like it was, I think. And then also there's strategies like we're doing quite a few midterm rentals these days, as opposed to long-term rentals. Short-term rentals is pretty saturated, and St. Louis isn't the best for that. We do have a few, but midterm rentals, I mean, that's like getting in short-term rentals in 2005, in my opinion. I think there's like 2 million traveling nurses in the United States, and there's 200,000 midterm rental listings on Furnish Finder. So for those that don't know, midterm is just like renting on a 30, 60, 90-day lease to traveling nurses, corporate leases, digital nomads, which I think that space is growing. So you have what's in very, very high demand. So you're able to charge, we charge double what we get for long terms for midterms. Now they move out a few times a year, but you still get high occupancy, you cash flow way more, they take care of the property, and it gets around all of the legalities of short-term rentals, because states or cities ban them by saying can't rent for less than 30 days. Well, midterms are 30 to 90 days, so it gets around that. So